person. That is company law. All right. For example, you are the owner director. Owner director salary. Company allow, we do nothing. We do nothing. Allow means nothing or nil. If it's individual business, cannot, we will add back. Add back. Okay, next. Note, salary paid to owner of a business not allowed in income statement. If it is not a company, salary paid to owner of business not allowed in income statement. If it is not a company, okay. For company, salary paid to owner director allow in the income statement. Okay. Not allowed in income statement only for individual business. You can see that not allowed in income statement. For individual business. All right. If it is company, we allow. Now look at more rules coming up. More rules coming up. Now legal fee. Legal fee paid on acquisition of non-current asset cannot add back. What is this legal fee? Legal fee, many types. One, if you are paying the legal fee to buy asset, at the time, let's say you want to buy a land and building, we sign an agreement. You want to buy a building, then we have to pay legal fee. So legal fee to buy asset, we cannot allow, because legal fee you add to the asset. Legal fee you cannot put in the income statement. So here the legal fee on acquisition of asset, you add to the asset. You cannot minus in the income statement. Therefore, this is capital expenditure, not allowed. So this one is capital expenditure. We want only revenue expenditure, capital double A. Legal fee, you pay legal fee to collect your money. You sell the goods, they didn't pay, you send them lawyer notice, you take them to the court. That is trade. Trade debt. Debt collection is trade. Trade allowed. Only it relates to trade. Suppose, let's say you are a company running business, you lend money to your staff. Staff didn't pay you, and then you send legal notice. That legal notice is not for business transaction, for lending money. Lending money is not your business. Therefore, that is disallowed. Legal fee paid on revenue allow only if the revenue is business. If the legal fee paid on revenue items not relating to business cannot. So for example, legal fee paid to collect money for selling goods, that is allowed. Legal fee paid to take the staff to the court because he or she didn't pay the money that they borrow. That one is, even though revenue, not allowed because they are not business activity, not related to business. So when I say revenue, it must be trade. Non-trade, double A. Got it? Okay. Let's see. Let's see. Okay, next. Okay. The word impairment, if they use the word impairment, another name is allowance. Whether they use impairment or allowance, we would not allow because the word impairment or allowance indicates expected loss. Loss can. Expected loss cannot. Ini anggaran. Expected loss means anggaran. Anggaran double A. Understand? Anggaran double A. This one. Expected loss. Anggaran double A. Suppose that loss is not expected, actually occurred, then can. The keyword is expected. That word is expected loss double A. Okay, expected loss double A. Right. Similarly, if the question says the company created or the business created allowance, allowance means expected loss or expected payment. expected loss, expected payment. So if your company provides in the books allowance for gratuity, bermaksud belum bayar, kita anggar, kita akan bayar. Anggaran tak boleh terima. So anggaran for allowance, the keyword is allowance for gratuity, allowance for retirement, allowance for payment, for any payment, or allowance for stock write-off. Cannot. All that we don't allow. All the allowance, impairment, tak boleh. Sometimes you must read the word impairment very carefully. They don't say anything, impairment means allowance. Sometimes if you read carefully, the word impairment could be actual write-off. So you must read the wording very carefully. So what about if impairment is bad debt? Okay, bad debt, just like that, just bad debt trade allow. But if they say bad debt, general bad debt allowance or impairment for bad debt, the bad debt is different from here. Can you see that collection? This is trade debt. Okay, if they use only the word bad debt, we allow. But if they use the word allowance for bad debt means provision for bad debt. Provision. The old name is provision. The new name they put there, allowance for bad debt. So bad debt, we have different names to look at. I'll give you that. Bad debt. Okay, bad debt. The thing was ini. If you see the word bad debt, trade, allow. Okay, impairment sini saja, sini habis. Okay, habis. So here, bad debt trade, allow. Bad debt non-trade, tak boleh. Add back. What is, for example, bad debt trade? I sell goods, you don't pay me. So bad debt. If I write off, bad debt. So impairment of bad debt can mean write off. So if they say impact debt, that one can. Bad debt or impact debt for trade, allow. Only if action has been taken to recover the bad. So if I sell goods to you, you don't pay me. If I have taken action to collect the money, action means sending you lawyer notice, sending you demand letter, yet you don't pay me, I write off, allow. If you never took any action, then we would not allow it, even though it is trade. Non-trade example, staff loan. Staff loan. Loan is not your business activity. That is for banker, money lender. If you are a trader, then loan given to staff, they don't pay you. Accounting, you can call bad debt. Tax, we don't accept it. Sorry. So now let's move on to the most complicated one, is this one. The complicated one is this one, that is legal fee for buying asset, capital, tak boleh. Legal fee, still under legal fee, debt collection, trade, boleh. Now we go to impairment. The word impairment means now they use in the exam allowance. The word allowance means impairment. The old term was provision. Now the old term is provision. Now we don't use the word provision any longer. Only old question they use the word provision. Now we don't use the word provision. Why? Because provision, if you look at IAS number 37, it defines provision as a liability. Before IAS 37, the word provision means anggaran, peruntukan. This peruntukan, anggaran, the word peruntukan was actually anggaran last time. Now, the definition changed. The word provision means liability. What's the difference between liability and provision? You must look at IAS 37. IAS 37 says the word liability means you have to pay. As a result of past transaction, your current commitment to make economic transfer. In simple terms, you have to pay lah. They are playing with words. Yeah, they are playing with words. Liability means you must pay, committed, finish. What is provision? Provision, as a result of past transaction, your current commitment to make the payment, but the amount is not known until one or more future occurrences. It means, provision means you have to pay, tapi saya tak tahu lah berapa kena bayar. Saya tunggu keputusan mahkamah. Macam itu. Baru saya tahu berapa kena bayar. Tapi saya tahu saya kena bayar. Katalah, I'm running through a red light. 5-7. Okay? And you want to defend, oh, I ran through the traffic light because I have to save somebody's life because of COVID. I have to rush to the hospital. Well, you got a legal point. But you want to save one person's life and you're putting 100 fellows' life in danger. So even though you have a reason, maybe they won't put you in jail. Still, they will fine you. Otherwise, everybody will use that as an excuse. So, beating through the traffic light is an offense, whether you're going for a good job or whatever. But berapa you kena bayar? Saya pun tak tahu lah, kena tunggu keputusan mahkamah. So kita buat anggaran in accounting. I have to pay so much. Maybe. So you put anggaran in the accounting, peruntukan, provision, allow, liability. Taxation, no. Anggaran, no. Why no? Provision, they don't use provision. Provision means you pay, you see. So provision is fine. But the word allowance here is no payment. Allowance means can be there, cannot be there, we don't know. Provision, you have to pay that, you have to pay, but don't know how much. Allowance, not necessary, it will occur. It may not occur. So therefore, anything they use the word allowance or impairment, meaning expected. Losses, expected, cannot. Losses, write-off, can. Expected, cannot. Therefore, allowance for gratuity, that means expected payment for gratuity, AA. Retirement, AA. Payment, AA. Expected payment, AA. Stock write-off, allowance, AA. Allowance for bad debt, AA. This word, allowance for bad debt, AA. But there is an exception for allowance for bad debts. Now I'm going to come there. So the word allowance cannot. So if you have gratuity, actual payment, boleh. Retirement, actual payment, boleh. Stock write-off, actual write-off, boleh. Anggaran, tak boleh. Anggaran is allowance. So what about the anggaran for bad debt relating to trade, but is general? This is one and only. The one and only bad debt trade anggaran allowed is specific. They must use the word specific. So here you see, trade specific. Relating to trade, specific bad debt allowance. Relating to bad debt must be trade specific allowed. Keyword specific. If they use general, or if they didn't use the word specific, that means general. General, what do you do? Allow. Okay? Allow. Okay? Allow. Okay? Let's see. So what do you understand now by this word bad debt? So bad debt got few category. Bad debt. Legal fee paid to collect bad debt. Allow if it is trade. Trade means business transaction. Non-trade, non-business. For example, lending money and staff not paying. Allowance, the word is, allowance means expectation. Impairment. You think you have to pay. You think you have to pay. You think there will be a stock write-off. Of course, there will be a stock write-off, gratuity payment, retirement. But all that we only allow if it's actually taken place, actually paid, otherwise don't want. Bad debt, this one is without the anggaran. This is the actual bad debt. This is actual trade, non-trade. Non-trade means lending money, they don't pay, you write off, we don't accept. Bad debt trade, you allow only if action is taken. But this one here is allowance. Allowance. So specific bad debt allowance. The word allowance means anggaran. So any anggaran for general bad debt or general bad debt provision, peruntukan hutang lapo not allowed. This is the khas or khusus, specific. Specific bad debt allowance, kita terima even though it is anggaran. Why? Because the law says, if you know somebody definitely not paying, if you estimate that someone definitely not paying, that one they allow if it is business. Only they allow if it is trade. That's the one and only exception. So all allowances not allowed except specific bad debt allowed. Anything other specific we don't accept. All other allowances, other. You must look at this all other allowances, both general and specific, other than bad debt, disallow. Okay. Allow only actual stock write-off. Allow only actual stock write-off. For stock, you only allow actual, no anggaran. And allow only actual payment for gratuity, pension, retirement pension or gratuity. Only actual. No payment, allowance, tak boleh. Bad debt recovered. Trade allowed. Non-trade, tak boleh. That means a staff borrowed money paying you now. That will be credited in the income statement. For tax, we will throw it out. Still taxable, not under 4A. That's why you put, I take it up, because that is non-trade. What about this? Bad debts recovered, trade allow. Allow means you can credit in the income statement, we will accept. Once you accept, nothing to do. You don't accept, recovered, you add, I will minus. Habis. Next. Most important one is Forex. This is the item they always ask you in the exam. Forex. Forex, if you know my diagram, no need to read anything, that will give you everything. Forex, number one. Look at it here, I put it here, number one, Forex. And here you have number two. Number two, you have this one. Right. Forex. Forex means foreign exchange. Forex stands for foreign exchange. Foreign exchange. That is Forex. Okay. Foreign exchange. Let's say this is acquired. Whether you are buying or selling non-current asset. Let's say I buy from Vietnam. Example, I buy from Vietnam 100,000 dong. Vietnam currency dong. I buy 100,000 dong today. Maybe today the exchange rate is to US is 1:4. Dong, I also don't know. Whatever the rate. Let's say I'm just taking a simple rate. Let's say 1:20. 1:20 means that will be 5,000 dong. Okay. How many dong is that? Okay. 5,000 dong. So that means 100,000 dong divided by 20, this is RM 5,000. So today I'm buying an asset. I'm buying an asset from Vietnam on credit. So I owe them 100,000 dong, which is 5,000 ringgit. Correct? Let's say at the end of the year, dong becomes 120,000. Same figure because of exchange. If you pay today 100,000, end of the year, ringgit moved, dong value also moved. So the 100,000 became 120, meaning dong became stronger. So I owe Vietnam 6,000. Last time I owe 5,000. Now I owe them 6,000. So I have to pay extra one. That one is in relation to asset. Asset. Now, any forex, this is, you're going to have a forex. You have to pay from 5 to pay 6. You have to pay more. So it's going to be a loss for you. So if you pay money more than what you're supposed to pay earlier because of exchange rate, you pay extra. Now that anything that you incur, whether on buying or selling, relating to asset, gain or loss, whether realized or unrealized. If relating to asset, we don't allow, because relating to asset is capital expenditure. That's why we don't allow. Anything relating to asset is capital expenditure. Capital mana boleh, tak boleh. Okay. So that is capital expenditure. We don't allow anything that you incur on asset, non-current asset. Gain, tak boleh. Loss, tak boleh. What is the meaning of realized and unrealized? Realized means you have already paid. That means the 1,000 just now I told you dong, the difference between 6 and 5. Realized means you already paid and the profit or loss has occurred. Unrealized means you haven't paid. You haven't paid, but at the end of the year, you are preparing the balance sheet. What is balance sheet liability? Balance sheet liability bermaksud belum bayar. So when you prepare the balance sheet liability or SOFP, Statement of Financial Position Liability, anything unpaid, unrealized. So if you have a foreign liability, if you pay, the profit or loss is known as realized. If you have a foreign liability which you haven't paid, but you have to put it in the financial statement of financial position, balance sheet, any liability unpaid shown in the balance sheet, correct? So if you have a foreign liability, still you show. But if the figure differs from the start because of exchange, the difference is because of loss. We call it unrealized. Unrealized means loss or profit arising from unsettled transaction. This one, settled transaction. Both also, whether gain or loss, relating to asset, non-current asset, capital, we don't allow. We don't allow. What do you mean by we don't allow? If it's profit, you add I minus. If it's loss, you minus I add. That's it. The word realized means money has been paid. Money has been paid. Unsettled means the money has not been paid. Money has not been paid. That's it. Now, if I look at this side, Forex. What is Forex? Dealings with overseas. As a result, you didn't pay immediately and you paid later, or you collected the money later and you did not get the exact amount or paid the exact amount because of exchange rate movement. So, Forex. Forex relating to current asset, not non-current asset. I said current asset. Current asset dealing with buying or selling inventory. Inventory is this one, stock. Stock is business item, trading item. If there is a forex relating to stock, profit or loss relating to stock, okay, that is why we have this stock. I buy on credit from Vietnam. I have a creditor payable. If I sell goods to Thailand on credit, I have receivable. They are all trade. The hutang is trade. They go under current asset, current liability. Okay, current asset or current liability. They go under current asset or current liability. Now, current asset, current liability, this one, if realized means already paid, settled. You allow both gain and loss. Both gain or losses we allow. Allow means fine, we accept it. Right? This figure, realized or unrealized, will appear in the income statement. Unrealized appearing in the income statement. Unrealized, anything unrealized, not allowed. Gain or loss, both also not allowed. Gain you add, I minus. Loss you minus, I add. Finish. Okay. Now, what about this non-current asset? Non-current asset, the gain or loss, the gain that you put in the income statement, the loss that you put in the income statement. Taxation, we don't accept. Taxation, we don't accept because non-current asset. Why we don't accept? Because that is capital expenditure. You can see. Capital expenditure, we don't accept. Capital expenditure, we don't accept. Right? However, current asset relating to inventory will create payable receivable, which is current asset. Trade payable receivable, realized in the income statement, allow. Unrealized cannot. Whereas non-current asset, both also can. To remember, easier. So, what do you understand from Forex? Forex, you look like this. If they say non-current asset, come out. They add, you minus, they minus, you add. Current asset, that is trade payable, trade receivable. This is the word they use. Allow if it is realized. Not allowed if it is unrealized. Unrealized means unsettled. That's it. Easy. Okay. Export cost. Any goods exported or imported, whether using Malaysian ship or non-Malaysian ship, we allow, but only single deduction. Last time used to be double deduction. That is 2 years ago, more than 2 years ago, we allow if you export or import using Malaysian ship, we allow double deduction. Now, whether you use Malaysian ship or non-Malaysian ship, single deduction. However, if you buy insurance, to export, so we call it export credit insurance. You are selling goods to USA, you are putting it in the ship, maybe it's worth 1 million ringgit. Something happens in the sea, maybe the ship may sink, something may be missing, damage to your goods, anything can happen. So you take insurance. If you take insurance for exporting goods, okay, when you import, that is not your duty. Import, the sender must make sure it comes to Malaysia. So they would have taken the insurance. When I export, when I send, if the goods doesn't reach the destination overseas, they are not going to pay you the money. So something happens on the sea, then insurance will take care. So if you buy insurance for export and paid by a company paying this, because export, all these big item all done by company, paid by a company, and if you buy the insurance with Export Credit Insurance Berhad, Malaysian Export Credit Insurance Berhad, this is Malaysia, you must buy the insurance with Malaysian insurance company. This is one of the example. In short, with example, so I'm giving you example, Malaysia Export Credit Insurance Berhad, or any Malaysian insurance company where the shares are majority owned by the Malaysian, you can go for double deduction. What is double? Like last time, employee, disabled employee, $1, I give $2. Here, $1, you can get $2 deduction, if approved, another condition, by the Minister of Finance. So normally, if you are making exports on a regular basis, we go to the Ministry of Finance. They will give you one big list, which are the insurance in Malaysia, because you don't know which Malaysian insurance company is controlled by Malaysian. So go to the Ministry of Finance, they will give you one list. Okay, you use this company, you export, we give you double. So one of those big famous example is this one, Malaysian Export, Malaysia Export Credit Insurance Berhad, MECIB. So exam, if they use this word, no need to tell, automatically approved by the minister. But for your exam, you will tell everything. Export insurance approved by the Minister of Finance. Generally approved. Normally, if you see this word, exam, generally approved, unless they say clearly otherwise. Okay. So in simple terms, any ship, this is the ship. This is the shipping cost. Shipping cost, in short, for goods with MECIB. What is MECIB? Malaysian Export Credit Insurance. Can go for double deduction for export. Habis. Okay, don't forget, yesterday I told you last class, paid up capital. Below 2.5 million, we call it small company. Small company, you pay 17%, balance 24. The other one, 24%. Large company, 2.5 million. Okay, done. Now slowly we look at this question. I told you to try. Let's look. Okay, after this question, we'll take a break. Now we look at this one. Okay. There are other items of plus minus I'll give you. I will analyze and send it to you, don't worry. So these popular ones I've done. Okay, all are in 1,000. Company, Sdn Berhad. Income statement for the year December 20. Loss before tax, 19. This is the figure we start with. Loss before tax 19. That's the figure we start. Okay? That's the figure we start. 19. After taking into account the following. Depreciation. Depreciation, what do you do? You minus, I add. Loss. Loss, what do you do? Loss on sale of van. You minus, I add. This is what we did the other day. Salary for staff. Staff allowed. What about wife? Wife, that question, she was not a staff. This question, I must check the question. This question, it says, wife not a staff. So not a staff, we don't want. So we don't accept this figure. Whatever you pay, doesn't matter what is the market value. Market value only if you're a staff. Any relation not working, cannot. You minus, I will add back. Staff is okay, allow. Son, you paid 48, market says only 45. So I'll add back 3. So here I'll add back 3. Correct or not? Okay. There I'll add back 3. Disable. Disable, I give double deduction. Correct? I give double deduction. Employers EPF paid. EPF we only allow 19. So we add back 1%. Malaysian export credit insurance, I did in the morning just now. So here I give double deduction. So Malaysian export insurance, you get double deduction. DD, double. Expenses, 30 private. Private, 25%. So 25% private, we don't allow, add back. Add back 25%. Now, coming here in a minute, you're paying bonus to son. Bonus allowed. But EPF, you paid 20%. Son is a staff allowed. Question says son is a staff. So son bonus we allow. But EPF is paid on bonus and salary. EPF we only allow 19% maximum. Therefore, add back 1%. So we add back 1%. Okay, 1% we add back. We look at the next item. Interest. Interest paid. We need to borrow money for business. When you pay the interest, we allow. Unless the question says you borrow money for investment, then interest you cannot deduct. So here you can deduct the interest. Interest received, cannot. Why not? Interest received is 4C. You show under 4C. We are calculating 4A. This is 4A. This is 4C. I don't want. Take it up. So you add, I will minus. Discount is business. Paid up capital, 2 million. 2 million means small company. Small company, what is the condition? You pay tax at 17% up to 600, provided they are resident. Non-resident will end up paying 24%. Fine cannot, penalty cannot add back. Audit fee can, tax paid cannot. Tax is paid after making the profit. Anything that you pay after making the profit cannot. Audit fee is revenue expenditure, but non-business, allowed by law. Law allows, allow. Rent receive is 4D. 4D. 4D, I don't want. You add, I will minus. Rental income, you add, I minus, because this is 4D, not 4A. Rent paid is business expense. Payment we allow. Nothing to do. The following has not been shown. Not been shown. That means you have to show. I'm coming there. Now here I missed something. Purchase of car. Purchase of fixture. When you buy car, you put in the balance sheet statement of financial position, not in the income statement. So when I buy a car, I cannot put here. I cannot put here car. I cannot put here fixtures. Wrong. You can only put that in the balance sheet. So what do you do? If you put the car here, you minus, I'll add it back. So remove that. Remove that from the income statement. You remove that from the income statement. This one. Car you debited. Debit means you already deducted. I'll add back. Fixtures you already debited in the income statement. This one you debited here. Debit means minus already. Now I'll add it back. Okay. Then you see the word, the following has not been shown. Now you show lah. So once you have done all this add minus here, you get adjusted business profit, the first B. B, B, C. Next B, balancing charge, not given. B, B. Balancing charge not given. B, B, C are given. This is the C. B, B, C, S. S is your statutory income, you calculate. B, B, C, S, B, N. S, this is your statutory business loss. S, B, B. This is the next B, brought forward loss. So we follow the format and then you put through the figures. Capital allowance unabsorbed. Unabsorbed, current year capital allowances, all the same. Okay, all the same. Cash donation not recorded. Now last time, cash donation recorded here, you minus, I add back. Now donation not yet recorded, so no need to worry, leave it. Not recorded, leave it. If it's recorded, I take it out. However, cash donation can only be deducted later. So this I'll deduct later. Now I don't do anything. If the figure is inside the income statement, you take it out. They add, they minus, you add, but not in the income statement. So no need to show. However, later you have to show this as deduction from aggregate income. Okay. Any asset that you buy, you must calculate capital allowances. This question, capital allowances not given. They only give you capital allowances brought forward. You can see the brought forward. They only gave you capital allowances brought forward. Okay, this is brought forward. They didn't give you how much is it for this year. That one they didn't tell you. Okay, next. Okay, now you look at how I do until certain point, and then we discuss about capital allowances. Okay, you can see here. You asked to compute statutory aggregate chargeable income. You see all this? All these figures. We started with this. You add the interest. You add the rental because they are 4C, 4D, non-business. Correct? They are non-business. Discount receive is business, allow, nothing to do. 74. All the figures are in 1,000. Now, what you deduct, I will add now if I don't agree. Look at depreciation. 34. Remember just now you deducted, I'm adding back. Loss on sale, add back. Salary staff, allow. Salary wife cannot, non-staff. Salary paid to son, you paid more than market value, excess, add back. Anything that you pay to your relation in excess, add back. Disabled, I give double deduction. Now I look at the EPF, employer's EPF. Wife not allowed. Wife salary not allowed. When you don't allow the wife's salary, then I don't allow the EPF. So when you don't allow the salary at all, EPF not allowed totally. So you add back. Non-staff EPF, all, everything is disallowed. Son, you paid 48. We accept 45. Up to 45, I accept. I also accept EPF 19. So up to 45, EPF 20% you paid. I only accept 19, add back 1%. Salary above 45, the excess, which you throw it out. When you throw the salary out, I throw the EPF also out totally. I accept the salary, I accept 19%, add back 1. If I don't accept the salary, I would not accept the EPF like the wife. So first 45, add back 1%. The next 3, you reject the EPF 20%. So that is your total altogether. So I just made a subtotal here. Otherwise, difficult to add one shot at the bottom. I just put a subtotal, plus, minus, plus. Next, payment of bonus. Bonus we allow. Son is a staff. Nothing to do. Now look at the EPF on the bonus. EPF, you paid 20%. And extra, more than 19 cannot add back. 19 is your maximum. Add back. Question gave you interest. Interest paid, they don't tell you anything, we assume business. Business, nothing to do. Okay. EPF for staff. Staff allowed, but only 19, add back 1%. Disabled employee, you paid 40,000 salary. EPF also 19. EPF, we don't give double, no. 1. Malaysian export credit insurance. This one you give double. Okay, double. Private expenditure, you saw just now. Add back car and fixtures. Capital expenditure. Capital expenditure double A. Add back. So you add back capital. All right. Next, you see here, fine and penalty, double A. See the word fine and penalty, double A. Audit fee, boleh. Tax paid, double A. However, if you pay tax filing fee or company secretarial fee, that one I give in total 15, but this question we don't have. We don't have. I'm just giving you a note here. 15,000 allowed for both company secretarial fee and filing fee. This is not filing, this is tax paid. Tax paid, double A. So your figure is 64.9. $64.9. So that is your first B. After class, you must go and redo this question again. Then only you know. That is your first B. PBC, first B, adjusted business income. All right. You can go here. Minus 74 plus this. I put a total already, subtotal here. One more subtotal for you. It's over here. So you get B. B, B, C. This one we don't have. Capital allowances. This one given. That is given in the question. BBC given. So this figure is given. So that is given. You can see this figure is given. Okay, that is given. So this figure 5 is given. Okay, 5 is given. $18, I have to calculate. C working. I'm going to show you how to calculate the capital allowances. BBC, current brought forward given. Current year, I'm going to calculate. Remember, they bought a car and fixtures, we calculate that. So I'm going to show you how to get this. So once I show you this, your answer will be 23. BBCS. Then you minus your brought forward loss. Also given. The brought forward loss, you look in the question, also given. This one is also given. Where is it given? There. Eight given. BBC, this is your S. Minus your loss. Net. And BBC SBN given. Other income. Other income. Now you bring in your other income. Remember just now I threw out my bank interest. Bank interest, if it is individual exempt, company taxed. Look in the question. Interest. Along interest tax. We assume that is bank interest. Interest, individual exempt. Company text. Rental, this is rental income. Bank interest 4C, rental income will go under 4D. So this is your other income. Aggregate income. You see this one plus this aggregate. Now I minus my current year loss, which I don't have. Remember donation? Not yet shown. Now I show that. 10% of aggregate income or the amount paid. Remember at the bottom they gave you amount paid 10,000. Not shown. So now I'm going to show that here. 10% is 8. Paid is 10. So I only take the 10%, whichever lower. Company aggregate chargeable. Company don't have total income. Their total income is chargeable income. Company don't have relief. That's your answer. Next, you look, if the question is silent, we assume it is small company and we assume it's a resident company. But always the question will tell you, don't worry. I'm saying if they don't tell you, in case they don't tell you, we assume that it's a small company and resident. If that's the case, you pay 17%. These are all in 1,000. 17%, that will be your tax. Okay. So your tax will be 12,385. Habis. Okay. Now we want to see how you're going to work out your capital allowances. Okay. Capital allowances is a big topic. We'll see how you're going to do it in a minute. Okay. Again, you must go back to the table. Remember tax table I gave you? Very important. You must go through there. Okay. You have to go through the tax table. Okay, tax table. Now, capital allowance, which I haven't given you. Next topic is this. So now you make a note, take a pen and write capital allowances for car. We got two allowances, something called IA, initial allowance, and then we say annual allowance. Initial means we give in the year you buy. If you see the word IA, initial allowance, this is trying to calculate capital allowances. For car, depending on what you buy, if you are buying car, the year you buy, I give car 20%. We call it initial allowance. IA given when you buy. AA is given at the end of every year. Annual allowance. This one, only in the year you buy. This one, every year, including the year you buy. So IA year one only. IA we give only in year one. Year one only. The year you buy, that's the year. This one, every year. You give AA for every year. Only if you use. You must use it at the year end. Every year you give. If you use it at the year end. AA given every year if you are using it at the year end. Condition, AA given every year if you are using it at the year end. Let's say you don't use at the year end, you already sold it. Once you sell, you're not using at the year end. So if you don't use it at the year end, you don't get AA. Every year end use. Year end use. If you are using it at the year end, we check are you using it at the year end. Every year end use, Okay, so we give 20% every year. Okay. IA when you buy. AA every year I give, so long it's being used at the end. Okay. Then you see the word fixtures. Fixtures we give 20%. AA 10%. So you have to remember this. I've given you this in the table. All other item we call it plant and machinery. Other assets we call that as plant and machinery. Okay, that one we give 20 and 14. This, if you look in the tax table, it is there. So please refer to your tax table. Okay, tax table. You must refer to the tax table. I'm opening my tax table. I'm looking at it. You see there, the table I sent to you, it is there. If you can't find it, you tell me, then I will take you there and show you. Okay. It should be there. 2014. Plant and machinery. Other assets. Fixtures, furniture, fitting. This one. Furniture, fixture, fitting, all that. This one, furniture, fixture, fitting. So we have 20%, 2014, 2020, 2010, 2014. 2020, 2010, 14. 2020, 2010, 2014. Every year. You give this every year. This one, year one only. After that, no more. Year one only. That means in the year you buy. So here, what did you buy in this question? In this question, remember you bought car, and then you bought fixtures, but you put in the income statement, take it out. Now you're going to work up. Office equipment, furniture, fixture, fitting, office equipment, all that. We call it office equipment. We call it, you bought it at this. This is your cost. This is your cost. The one for vehicle, motor car or vehicle, all vehicle. Car, lorry, van, tractor, all vehicle. Okay. Now, for taxation, each asset you keep separately. Each asset you keep separately to calculate your capital allowances. So the depreciation for taxation will be the cost. We call it as QPE. The word QPE means qualifying plan expenditure. Accounting you call cost. Accounting you call cost. Tax you call it QPE. Qualifying plan expenditure. The word plan means asset. The word plan means asset. Non-current asset. So as I told you, for office equipment, IA 20%. In fact, 20% IA is 20% for everything. So IA 20%. Motor vehicle, IA 20%. I told you office fixture. Office fixture 10%. AA. IA for everything is same. AA for car 20. AA for furniture, fixture, fitting, office equipment. We call it office equipment. This is office equipment, including photostat machine. Office equipment, including photostat machine. Okay. Office equipment. How much? 10%. You can see here. AA, IA. First, I put one line IA. Next, I'm putting AA. 10 for fixtures. 20 for car. Car is the same figure. So 4 plus 6, 10. 2 plus 6, 8. This is your capital allowances. The balance, we call it residual expenditure. This is the balance. The balance, we call it residual expenditure. The balance, we call it residual expenditure. Okay. Next. Another name for residual expenditure, we can call it tax written down value. Tax written down value. Another name, tax written down value. In accounting, under IAS 15, they will call it as tax written down value. Malaysia, we call it residual value. International, they call it tax written down value. Okay, habis. That's the meaning of written down value. Another name, tax written down value. Habis. So I take the 18. Kemudian saya buang di sini. Ini. Tadi saya kata working. Ini dia punya working. Habis. 18. Habis. Itu aja. Boleh. Okay. Now I give you a break, 10 minutes. And then we'll continue the long class. What's the time? 9:30, I see you again. Break. See you at 9:30. Okay, take a break and then I'll continue. All right, any students, I never heard your voice. Come on, can you hear me? Are you there or are you sleeping?
Yes.
Oh, okay. Okay, I've already sent you the notes up to this point, correct?
Yes.
Ini sikit aja boleh ambil satu gambar. Ini ataupun ini benda semua ada dalam apa table yang I begitu. Table, you know, tax table, you refer there, it's all there. Okay. Next 10 minutes, I decide what to do. So we'll take a break and then I'll come back.
All right, see you.
Hello, everybody. Are you there?
Yes.
Yes, sir.
Okay. Let's do a little bit revision of what we did today, and then we get into more stuff later. Okay. I've sent you Forex last class. This class, I'm giving you the same Forex, but in a different version, that's all. Foreign exchange. Forex means foreign exchange. All right. Foreign exchange. Now, if you look at this one, non-current asset, sale or purchase of non-current asset, whether you make profit or loss, whether it is realized or unrealized, we will disallow. What is disallow? Profit you add, I minus. Loss you minus, I add. I do the opposite. That's it, finish. If it is sale of stock relating to creating inventory, trade receivable, trade payable, this one. If it is realized, allow. Unrealized, disallow. What is plus minus? Profit you add, I minus. Loss you minus, I add. I do the opposite. If it is realized, we allow. That is only for current asset. You have to check whether realized or unrealized. Here, no need to check. Every item for non-current asset not allowed. Okay. All right. What is this word realized, unrealized? Let's say I buy asset at 420. 420, you buy acquired stock on credit. Okay, at 420. End of the year, the 420 becomes 4. So I'm going to pay less saving. That is profit. The profit you have to check whether realized or unrealized. Realized means paid. You already paid. You already paid this. Unrealized means unpaid. Unpaid, that means book loss, book profit. Book loss, book profit, we don't allow. Okay, we only allow actual profit, actual loss, and that is only for the following item. That is for this. Allow for that if paid. Not allow. Unrealized. Non-current asset, everything not allowed. So be careful. Bad debt. Action must be taken. Fully deductible. Non-trade. Disallow. Now, the word provision is the old name. Now use the word allowance. Allowance, another name is impact debt. So impact debt for general or general allowance, not allowed. Specific, allow. And it should be specific trade. If it is not trade, cannot. Okay. Impairment allowance. General, all general impairment not allowed. Specific trade allowed. Bad debt. Others cannot. All other allowance not incurred, whether specific other than bad debt, whether specific or general, disallowed. That can be impact cost for warranty cost, retirement benefit. Right? We add back to profit. Okay. If paid, allow. Only when you allow if it is paid. Okay. Now I take a look at the T account. Allowance for warranty. Which figure allowed, which figure not allowed? Let's take a look. Now, allowance for warranty in the income statement, you have taken 10. I show you. Income statement, you put there 10. Okay, you already recorded there 10. This figure has come here. Remember, allowance for warranty, I don't allow if you put anything in the income statement. It should be paid. If you look at this one, this is the opening specific, opening general, closing specific, amount paid, and that goes to the income statement. That figure I don't want. So, if I don't want, you minus, I will add back. So, which is the figure that is allowed? We allow only this figure that is paid. So, this not yet shown. They only show this figure. The right figure is supposed to be 30. So, what to do? Take out this and put back 30. That means take out this minus, whatever you minus, I add back. And then I will only deduct this. Because this has not been shown. So effectively, you have to minus 20, meaning you put 10, I supposed to put 30. That means not enough. I have to put another 20 here. When you put on the debit, that means minus. Or easy way, buang ini, masuk yang baru punya ni. So net effect is minus 20. Allowed deduction amount. For this question, allowed deductible amount is 30. Allowed deductible amount is 30. Since 10 has been shown, you'll deduct another 20 from profit. Itu saja. Or buang ini, tolak itu. Or in another words, just minus 20. Got it? Right. Look at the next exercise. Okay. This exercise you can see. Okay. Allowance for bad debt. Allowance for bad debt. I show you. Okay. Now, if you look at the credit side, debit side, you can see here, general tak boleh. Specific boleh. This is for bad debt only. Bad debt trade. General tak boleh, specific can. Bad debt recovered trade can. This question you get income statement 40, we see whether this is correct, whether this amount is correct or not. If you look at on the debit side, bad debt boleh. Bad debt loan tak boleh. General tak boleh. Allowance for bad debt only specific boleh. So this side, how much can? This side, we allow only 63. Look at this side. This side, we allow which one? 30. We allow only 30. Allowed 63. Allowed 30. So what is the right figure should go to the income statement? The right figure that's supposed to go to the income statement must be 33. You see, 63 minus 30, you're supposed to take 33, not 40. So what this tells you? You debited 40, I supposed to debit only 33. Too much. Take out the 7. The correct figure will be 33. That's the correct figure. Since you put 40, add back the 7. Itu aja. Add back the 7. Okay. Why now only people coming in? So, okay. So this is how I analyze the T account. This is allowance for bad debt. Bad debt, huh? You can see trade. Bad debt, specific allowed. Specific allowed. Recovered allowed. General always cannot. Figure allowed 63. This side allowed 30. So income statement should be 33, not 40. Habis. Right, next part. Okay. Okay, next part, you must understand a bit of rules and then we do this one. Resident. Paying non-resident. If resident pays money to non-resident, if resident pays money to non-resident, the payment is subject to withholding tax. Any payment made by resident to non-resident, the payment is subject to withholding tax. Okay, so the resident, instead of paying him 100%, the resident will take out the withholding tax and they will pay to the government. So you only get net. Okay, for example, this is another topic, we will do it sometime next year. Any payment of money from resident to non-resident, if you are not working in Malaysia, if you are working in Malaysia, that goes under employment. Non-resident, under employment, you pay 30% tax. What about people, non-resident, coming here just to work for a few days and then they go away? For example, let's say they come here as an actor. They perform for 4 days and then they go. Guest speaker, they come here and work as a guest speaker for 3-4 days and then they go. Athlete comes here for a sport meet for 1 week and then they go, but they get paid. So if you are here on a temporary basis, not here working or not having a business, you are here not having a business, not working, and then you get paid, resident paying non-resident, you have to pay withholding tax. For example, I give you this. Let me put it in T account, easy. The exam question can be in this form or can be in this form. Nowadays, difficult to type in this form. So easier to put it this way. So every exam question normally now appears in this format. So let's say I give you here allowance for royalty. Brought down, opening figure, you owe them 20. At the end, you owe them 90. You paid them 30. Income statement, this was shown. Income statement, I will never accept this. Allowance only accepted if you pay. Accounting, we accept this. Tax allowance need to be paid. Here the word allowance means provision. Here the word allowance means expected payment for royalty. This is not actually paid, expected payment for royalty. Allowance can be mean impairment or expectation. So expectation payment for that is this, they put in the income statement. We only accept if it's paid. All right. Okay. What to do? Let's see. This is the income statement, debit figure. That is this figure is shown here. Exam, they may give you like this. That's the figure. How they got that? By making use of these three figures, which is the opening plus this. You get 120 minus 30. You get carry down 90, balance sheet figure. We want to know what is the right figure. The right figure is this, amount paid, not amount shown. So you show 100. I'll only accept amount paid 30. That means add back 70. You see, in the income statement, this is income statement. Income statement, you have only shown 100. There. But the figure I will accept is only 30. What do you pay? So I accept 30, I reject 100, meaning I'll add back 70. Okay. Now, I just told you about this. If royalty is paid by resident to resident, no withholding tax. Only resident to non-resident, there will be withholding tax. If resident to non-resident, question will tell you. For example, using the above exercise, royalty was paid by resident to non-resident. No withholding tax was paid to IRB. Compute the allowable and figure to be adjusted against profit. Now look at this. Withholding tax only need to be paid to IRB. IRB is the Inland Revenue Board. If resident pays non-resident, in our case, WHT will never arise as payment was made between residents. Between residents, no withholding. So if that is the case, the full amount of 30 deductible. Since 100 has been deducted, we add back 70. Okay. So this question. Okay, here question tells you resident to non-resident. I'm saying you, I'm giving you a note. Note. Resident to resident, you must pay withholding tax. You don't pay withholding tax, the payment will not be allowed. Hello? Any payment from resident to non-resident, if you pay in the form of money, allow in the income statement only if WHT paid. Resident paying non-resident. Have you paid the withholding tax? Yes. That figure can be debited in the income statement. Right? If resident paying to resident, no need to pay, no need to talk about withholding tax. Resident to resident, no withholding tax. Okay? No withholding tax. Okay, resident to resident, no withholding tax. Okay, other item. Renovation. If you see the word renovation, it is improvement. Improvement we don't allow in the income statement. Except Section 34 says, we'll give special deduction if you spend money renovating the building for disabled employee to perform duty. Now, disabled employee's salary double deduction. Others only single deduction. So again, let's say the orang kurang upaya, they need some special thing in the toilet, they put at the side to pegang something and so on. That is part of the renovation. So if you do something, let's say the disabled employee want to walk up the stairs, and let's say they put the railing at the side to hold and walk. They do some special thing, or they create a lift for the disabled employee to move up on the stairs. So anything that you do for disabled employee, if you do renovation of a building that is suitable for the disabled employee to perform duty, we allow that as revenue. The capital expenditure is allowed in the income statement under something called special deduction. This is special. Only for disabled. If you are a normal employee, we don't allow that. Improvement not allowed except for disabled, but single deduction. Okay. Can you see the word here, W and E? That means wholly and exclusively. I'm coming there for the word. Have I written that somewhere? Not there. Wholly, exclusively. The word W and E stands for wholly and exclusively. I didn't write there. Maybe I put it now. Wholly and exclusively. This word here, wholly and exclusively, that is the meaning of that word. Wholly and exclusively means we only allow an expense. Even if it is revenue, it should have been for the purpose of business. Any revenue expenditure, section 33 says, we will allow it only if it is wholly, exclusively incurred for business. Therefore, if it is capital, we don't accept. Capital is improvement. Capital expenditure, this one, is improvement. We don't want. If capital expenditure is improvement, we don't want, like renovation. Repairs, for example. Repairs can be revenue, can be capital. Capital, if it is improvement, not allowed. If repairs is revenue, we allow. Repairs revenue is like painting. Improvement is renovation. Revenue is like, example, repair, maintenance. Painting, we allow. Okay. Section 33 also says, expenses to be allowed in income statement. It must be business expenses. That is revenue. Wholly, exclusively incurred in the production of income. That's the definition. Therefore, private expenses not allowed. You must look at it. Private expenses not allowed. Okay? Right. There are two cases for me to explain. Malalu and Raman. You see this case here, Malalu and Raman. And Queen's case. Two cases to explain. So just I explain and conclude this work today. Now, okay, last point before I get into the explanation. Any expenses paid to competitor persuading not to operate, not allowed. So let's say near your house, Giant is opening a supermarket. After 6 months, Tesco wants to open another supermarket. The two businesses are the same. So if Tesco comes, definitely Giant will lose some of its business. And maybe both also cannot make profit that much. Because your profit, I take half. So maybe Giant wants to talk to Tesco. Dear Tesco, we came here first. If you come, you will take half of our profit. So we're not going to make much. Why don't you do Tesco, you do business somewhere another 10 kilometers away? Better for you, better for me. And I know you started work here, we'll give you 1 million to move. And you pay them to keep them away from competing you. Now, any expenses paid, you can see here, any expenses paid to a competitor, very important, persuading not to operate, not allowed, because that is not an expenses incurred by your business to create income. That is an expense incurred to stop somebody from competing against you. We don't allow. Okay. Now we go back here. What is this Malalu and Raman? Malalu and Raman is a story about a lady barrister. Lady barrister. Lady barrister means, you know what is that? Barrister means lawyer. Now, in this case, what happened? The lawyer bought a black coat, black gown. You know, the lawyer goes to the court, they wear the black color coat. So she bought the black color coat. And then she said, well, I'm a lawyer. I need to buy this coat. I want to deduct the cost of the coat in my income statement, because she said my expenses is rental, paying other junior lawyers, electricity bill, traveling costs, and rental, and the money I spend buying my clothes. Without these clothes, I cannot go to my court. Now, according to her, she bought the overcoat to use it in a business, and she said wholly exclusively incurred. But the judge did not allow it. Judge said you cannot minus the cost you pay for your clothing, because the judge said the clothing you are wearing, I know you need to wear that to come to the court. But on the other hand, you are also wearing it to cover your body. So the judge asked, tell me how many % you are covering your body and how many % you are using the coat to run the business. She got stunned. She couldn't say anything. So the rule is, if something that you use for business, it should be only for business. If you are sharing it for yourself and for business, and if you don't know how to break it up exactly, like telephone bill, I can say 60% business, 40% non-business, you can break it. If you don't know how to break it, then we totally disallow it. Another case, this is food case. So as I told you, this one is food, makan. This one is lady barrister. Okay, that is the barrister's case, lady barrister. Okay, this is the barrister, lady barrister. Barrister means lawyer lah. Okay, here, food case. What is this food? Now, one person was working in Manchester. That person's work was transferred to London. In London, the food are expensive. Makan is expensive. Example, in Manchester, those days, this is 100 over years. In Manchester, they used to pay 5 cents one meal. When they come to London, they pay 10 cents for one meal. Okay, they're paying more. 5 cents become 10 cents. So the lady said, well, I'm paying more for my food. Can I deduct this in my employment income? Because I pay extra because of my work. Judge said, cannot. She said, why not? The judge said, you are eating to live. You are not eating to perform duty. So tell me, the makan you took, how many % to do the work and how many % for living? She couldn't break it. Therefore, totally disallowed. Wholly exclusively means only for one purpose. You have another purpose, if we don't know how many % for that exactly, we would not allow. That's it. And I want you to try this exercise. I've already guided you for homework. Try this. Tomorrow I'll get it done for you. Only that one exercise. Try. Okay? Try this. I'll clear that for you tomorrow. And then I'll add on one more exercise. Thank you. Hello, any question? Are you there or you gone?
Yes, sir.
Okay. If you got a class now? Hello? Do you have a class?
No, at class.
No, huh? Okay. So try that last exercise. And I will see you tomorrow for more rules.
Okay, sir.
Yes, sir.